Hey, this is Bubble Analytics, and this week we're going to have a look at my favorite indicator, the MACD. We're going to be expanding a few myths about how to use it, how not to use it, and we'll be creating backtests to show evidence of that. So to create the indicator, we take the 12-period exponential moving average of closing prices and deduct the 26-period exponential moving average. That creates the MACD line. And the signal line is the 9-period exponential moving average of MACD, and the histogram is MACD minus signal. And then conventional wisdom would have that you buy when MACD crosses above signal, and you would sell when MACD crosses below signal. But we are going to be having a look at a methodology that uses just the histogram to create the strategy, and then showing how that would work both for QQQ and for Tesla. So if you are ready to start coding it up, please read the disclaimer. Okay, let's begin then. So to start, I've opened up a fresh Jupyter notebook, renamed it MACD, and I'm just going to click in the first cell and hit Shift Return a few times to create some empty cells. We'll be pasting from our template today. The template contains repeatable code snippets, things that we use each time to create a strategy and then backtest it. Both the completed notebook and the template will be available to download from our website. That's via our GitHub account. The link is in the footer here. So let's make a start then. So first thing to do, as always, is to import our libraries. So I'm just going to take that whole code snippet, hit Shift Return to initialize them in the codebook, and then we're going to use the Y Finance library to download some historical market data. We're going to be downloading 10 years worth of daily time frame data for QQQ, the Nasdaq 100 ETF. We tend to find that if you can get a strategy to work on the Qs after paying fees and using no leverage, then chances are you're going to find a lot of stocks within QQQ that it's going to work for. In fact, we're going to show you that today. So this is what it should output. So we've got some nice OHLC data for the last 10 years on the daily time frame. And then what we're going to be recreating is the MACD indicator. So I'm in stock charts here. You can read the article. They'll tell you all about it, how to use it. And it is this indicator here. So there's two sort of quasi moving averages. There's the MACD line in green and the signal line in red, and then you've got the histogram bars sort of in the middle here. And then to calculate it, we need this formula here. So I'm just going to copy that, come back into the code book then, and we'll code this one up. So I'm going to define a function called MACD. And MACD is going to take in some data. So we're going to tell it where to find our close column, and then 3 numbers. So standard settings would be 12 for the fast line, 26 for the slow line, and then the signal line is the 9-day exponential moving average of the MACD line here. So we need to tell it that we're going to give it some data and then 3 numbers and 3, and then we're going to create fast and slow lines. So for us, our fast line, we're going to take the values in our closed column, and then we are going to apply the exponential moving average method, which is EWM. And for that, you need to tell it what span to take, or what sort of rolling window of values you want to take. So our span for our fast moving average is going to be equal to N1, which is our first number. It's going to be 12 when we run it. And then once we've got our values created there, from that, we're going to calculate the mean. So that's our first one for our fast line. I'm just going to copy that and use that for our slow line here. But that's going to be the 26 period average. So I'm going to change span is equal to N2, our second number here. So our MACD line is effectively just fast minus slow. And our signal line, which I'm just going to call SIG, is our 9-day exponential moving average of the MACD line. So we take MACD and then apply the same exponential moving average method, tell it what span to take, which is going to be our third number, N3, and then from that calculate the mean. And then our histogram, which I'm just going to call histo here, is MACD minus signal. So MACD minus sig. And then, so with our function created there, I just need to return 3 lots of values. So that is going to be Can't spell today. That is so we're going to return our MACD line, our sig line, and then our histo values from that function. So we're going to create 3 new columns with our data frame for each of these 3 values here. So tell it what data frame to add the value in, and then what you want to call the column name. So we'll have MACD, and then sig, and then histo. Have I spelled that right? There we go. And that would be equal to call our new function, which we called MACD, tell it where to find the close prices, DF, and then what the 3 numbers are. So 12, 26, and 9. And if I now just run that, you can see that we've created our 3 new columns within our existing data frame with our MACD signal line and histogram values. So next job then would be to recreate that on the chart. So we're just going to copy this as our example. So this chart is one big column. So one column with 2 rows of data. In row 1, we're going to have price, and in row 2, we've got our indicator values. So if I come back into the template here, what we're going to do is create a subplot with our 2 rows, 1 column. So I'm going to take all of this top section here and just paste it. I'm going to leave a little bit of gap to do our sort of strategy calculation in a minute. But so I'm going to take all that section there, and then I'm going to come down to the bottom and take all the bits that style it up, which is everything up to here really, and paste that in there. And then I'm just going to amend it slightly. So I don't want to save an image of my chart. I want to create a range break for the weekend days. So I want that there. And then these bits here, just tell it what theme to use and, you know, how big you want your chart to be, that kind of thing. So that's that part. And then what we're going to be adding is 3 sort of indicator subplot bits, 3 bits of data into that indicator subplot. So we need our 2 sort of moving average lines, our MACD and signal line. So that's this one here. And then we also want a histogram, which is the bar function. So our line would be scatter function and, or scatter method, sorry. And to do a histogram, you'd want the bar method. So I'm going to take all of this and paste that into here. And then because we've got MACD and signal line, we're going to use the scatter method twice. So we need that one in there. And then with these, all you need to do is tell it where to find the values that you want to display. So within our DF here, our MACD and signal lines we call all caps MACD sig, and then our histogram would be histo. So for our histogram, say for example, just tell it to go and look in that column to find the data and display it. And then signal line here, like that, and then our MACD values in this column. So, and then I'll just make that red, I think. And then the last thing to do is, because we want to display the date at the bottom on our x-axis, we need to set the date column as the index. So I'm just going to grab this little line here and come in and paste that above the chart. So if I run everything again, what we should, fingers crossed, find is that, yeah, so there we go. So we've got price above, QQQ price above with our MACD indicator below. And you can see it's displaying data from the start of the data set here. So I'm just going to change that a little bit. So we have 2,515 rows. I normally do about 300-ish. So I'm going to make that 350. And I'm going to start from bar 2200, and then that's just going to display the last 315. So, and that is sort of more recent price data rendered here with our MACD indicator below. So most of the articles that you read about MACD will tell you that to use it, what you're looking for is signal line crossovers. In fact, a lot of the YouTube videos and Festopedia articles, all that kind of stuff, tell you the same thing. So it's telling you that when the MACD line here rendered in blue, but in ours it's going to be red. So when that crosses above the signal line, that's a buy signal. When it crosses below the signal line, that's a sell signal. So we're going to test that out today and just see whether that works. So in order to do that, I'm just going to come in and grab my signal function and paste that one in here. And then I'm also going to grab this section here I'll explain what these do in a second. And then finally come back into our chart section and take this section here. And this is how we display buy and sell signals on the chart. So I'll pop that in there. So effectively what we're going to do is create a signal function that looks for parameters within parameters that we set. So it's going to run through our data set here line by line, looking for our buy and sell parameters to be hit. And where it sees a buy signal, it's going to put a 1 in the signal column. Where it sees a sell signal, that's going to be a 2. And then this function here looks in the signal column for a 1 or a 2. And where it sees a 1, it takes the low price, or 2, it takes the high price, and creates 2 new columns within our data frame, long entries and short entries, with those prices rendered, the prices sort of data in there. And then this section here adds a marker onto the chart wherever it sees a price in those columns. So if I come in for our actual signal, then it's bullish and bearish crosses of the moving average. So for example, this would be a buy signal here, for example. So you can see that the red line is below the blue line. Yes, and effectively what it would be was yesterday's value of the red line, MACD line, is below the signal line, and today's value is back above it. So a bullish cross. And then bearish would be same thing but in reverse. So what we're going to do is take the value in our MACD column, and then we're going to use the .iloc method and tell it yesterday's value, which would be I minus 1. So with the .iloc method, I is the current bar, I minus 1 is yesterday's bar, I minus 2 is 2 days before current, I minus 3, 3 days before current, and so on and so forth. So yesterday's value of MACD would be I minus 1. If that is less than yesterday's value in our SIG column, so iloc I minus 1, and then if I just copy all of this, and if today's value of MACD, so that would just be I, is greater than today's value in the signal, in the SIG, then render a 1 in my signal. So that would be a bullish cross effectively. And then if I just copy the whole thing and pop that in here, and then just switch around the symbols. So if yesterday's value of MACD is greater than yesterday's value of SIG, and today's value of MACD is less than today's value of SIG, that would be a bearish cross, put a 2 in my signal column. So if I now run the whole thing, it should render buy and sell signals on our chart here. So you see the little white arrows for buy signals and the little yellow crosses for sell signals. And in times where price is moving, steadily higher, or it's trending quite strongly higher, even here, for example, you can get a good buy signal. So a buy here and then a sell here. But when price goes flat, you're going to see quite a bit of oscillation where MACD sort of moving above and below the signal line quite often. It kind of goes flat like this. That is going to kill your strategy. So let's back test it and find out just how bad it's going to be. But if I take our entire backtesting script here and paste that below, so I'm going to get rid of this section. All that would be is sell after a certain amount of time, and then we're not going to trade on the close. We trade on the open following a buy or sell signal, and we're never going to hedge because we're going to have only one position open at any one time, and that's what sets this exclusive orders equals true. We're going to use no leverage, so margin is 1, just means no leverage, and we're going to start with a cash value of 100 grand. And for each completed trade, so that's a buy and a sell of, get long and then sell that long position, each completed trade attracts a fee of 0.1% of your 100 grand, so it pays quite a bit in fees. So if we run that whole thing again and have a look at it, you can see that it more or less gets killed. So you're in the market all the time because all you're doing is flipping between long and short. So where you get a buy signal here, you hold that long position until you get a sell signal, and then you flip short and hold that short position until you get a corresponding buy signal, and so on and so forth. And all the damage is coming from these sections here. So obviously the recent run that we've had, lovely, right? You make an absolute ton of money on that, even though it's probably a bit late to the party. We're going to try and improve that in a minute. But so bearing in mind that averages tend to be lagging indicators. You're often, if you're waiting for a cross, often you're late to the party. But what's really killing your strategy is these flat periods here. So all of these are going to be losing trades effectively. And if we go back and have a look at our stats, you can see the drawdowns horrific. You've got a very low win rate and you lose money overall. And I'm probably being a bit unfair to it, because if you used it just as a long strategy only, so if I comment out the command to actually get short. So where we get a sell signal, we close any long position we have, but we don't flip short, and run that again. It does actually make a little bit of money, just not very much. So you're in the market half the time. You make less than 100%. Your drawdown, considering how long you're in the market, it's not very good, and your win rate's still very low. So not a brilliant strategy, and definitely not one to use in my opinion. I think sometimes when you see these sort of videos on YouTube talking about using this one in this method anyway, they're cherry picking the times where, you know, price is trending strongly in either direction, and that's why they're getting good results. But if you're taking it over a longer period of time, like 10 years, like we're doing today, you can see its flaws, and these are the flawed periods. So let's try and improve on that now. So what I'm going to do is just copy a bit of my data here. So I'm just going to copy little code snippets from our existing code book here, and then we're going to recreate it and change it very slightly. So we're going to change our MACD calculation very slightly in order to try and improve upon it. So, and then what I'll do for now is I'll just take this section here for the chart, just so that we can have a look at the difference. So, alright, so I'll tell you what, let me create a few more cells, and then we'll leave a bit of gap like we normally do. And what else do we need before we get going? I'll take all that as well. Alright, so what we're going to do then is amend the MACD calculation. I'm just going to comment this out so we don't get an error when we run our chart in a second. But we're going to amend our MACD calculation slightly. So when you use an exponential moving average, it takes the rolling window of data. So for example, for our fast line here, we take 12 values, a rolling window of 12 values, and then we use our exponential moving average method. The exponential moving average applies a greater weighting to more current values within that range, and so we're going to get rid of that by just using a simple moving average, so we don't need span anymore. But we're just going to change that to rolling, so it's a simple moving average. So each value within our rolling window has an equal weight and contributes equally to the average that it creates. And then if I run all that again, you should immediately see a bit of a difference in the histogram values, which seems to, in fact, let me change that to white. They should just seem to be a bit sort of perkier. So, or seem to be more extreme, I think. So with the weightings coming towards more recent bars, I think it kind of dampens the effect. It smooths it a bit more. So what we're actually going to be using is the histogram today. So if I just sort of highlight this section here. So what the histogram's actually showing you is, one, it shows you the bullish and bearish crosses, so you don't need to calculate it as the MACD line yesterday was above signal line yesterday and below it today. The histogram moving from below zero to above zero is a bullish or bearish cross. So if the histogram value is, yesterday's histogram value is above zero and today's is below it, that's a bearish cross. So you can use it that way. But the more important way is that the histogram is tracking the spread between the MACD and the signal line, so the gap between them. And as the gap widens, the histogram bars get bigger, progressively larger as they sort of move up or move down in this case. So what this is showing you is basically that spread between them. And if you wait for the cross to occur, you're going to be late to the party. Whereas if you're tracking as the sort of gap between it starts to narrow, that is a better entry, or that's what we're going to try and do today. So I probably haven't explained that brilliantly, but so for example, look at the histogram values here. In fact, I'll tell you what I'm going to do. Let me just comment these out as well, just so we can see it a bit clearer. So if we look at just the histogram values here, right, what it's measuring is the spread between those two, the MACD and the signal line. And as for example, in this one, this is a bearish cross. So we know that the MACD crossed below the signal line here because the histogram value turned negative. And then as it moves down here, we can see that the gap between the MACD and the signal line is widening. And then as it starts to move higher, that gap is narrowing until eventually it crosses, giving you that bullish cross that we were looking at before. And what we're going to do to improve this strategy is to track when the histogram value turns up. And that's what we're going to use to create our long positions today. So as it starts to, so basically, if we look at this value here, for example, November the 24th is higher than November the 21st, and November the 21st is lower than November the 20th. So that is tracking the turn. So it's turning up, and we're going to use .ilock to do that. But before we do that, we are going to change the MACD calculation again, and we're going to smooth the histogram values. So to do that, rather than changing everything here, I'm just going to make histo1 as what was our histo, and then our histo now is going to be histo1, and we're just going to create a 3-period simple moving average of that old histogram line there. And run that again. And what we should find, if we go and have a look at our values again, is it's smoother. So you can with this one, you can with the histogram value, suddenly it can turn up here and then turn back down again. And that's what we're trying to avoid, getting a false signal buy. So you can see it's quite a lot smoother now. And that's what we're going to track. So effectively, if today's value of the histogram, if today's histogram value is higher than yesterday's value, but yesterday's value was lower than the day before that, that is going to be our trigger to buy now. So if I just put these lines back, and what we're going to do is take our signal function again and just doctor that a little bit. So if I grab this and pop that in there, and then what else will we need? We will need our, we're going to need this function as well. Okay, and then if we paste that down in here, and then I will uncomment this, because we're going to display our entries on the chart now. So if we're going to keep this the sell signal the same. So what we're looking for is a better entry here. So we're looking to get a buy signal closer to the lows than waiting for the actual cross to take place. But we're looking to capture as much of these big price moves as possible. So we're going to improve it slightly by improving our buy position and then hold it until we get the bearish cross of the averages. So for our sell signal, then it's going to be exactly the same thing. We're looking for a bearish cross of MACD of the signal line, but for our buy signal, we're going to change it. So it's all based on the histo values now. So if yesterday's histo value is less than the histo value on the day before that, so that would be I-2, and today's histo value would need to be greater than yesterday's histo value, and so that would be I-1, if that makes sense. And then what I normally do is make sure I don't want the buy signals that come with the histogram already positive, even though it's debatable, you can use them. I want it where the histogram is trending below 0. So we know that we've at least had a bit of a downside before the upside sort of taken off. So I'm going to add another line here to say that the value in our histo column today. So .ilock I, this is running at the end of the screen, isn't it? Has to be below 0. Okay, so I know it's hard to see that. But, so with a negative histogram value that then turns up, that is going to give us our buy signal. If we go and just run everything again, and fingers crossed I haven't made any errors. Okay, good. Right, so what you're seeing now is, remember that flat period that we were looking at before? We were getting our sort of buy signals here and our sell signal, buy signal, sell. So at least we're getting closer to the low, the actual low to give us our turn. So we've improved that definitely. And then we're not impacting our sell, you know, on any kind of strong price run like this one here. It's still the same sell signals, but we're capturing more of the trend. So if you remember that, I think our buy signal came here. So we'd have been buying there and selling there, whereas we're getting much closer to the low. So you're capturing more of the trend effectively. So if we now go in and backtest this, so if I come in and grab all of this section here and just copy and paste that down there, what we're going to do is, we already know that on the short side it doesn't work, so I'm not going to short. I'm going to treat this as a long only strategy. We know that if we get short following these sell signals, we don't win. So I'm going to get rid of that altogether, and then I'm going to, because I want to capture as much of the trend as possible, I don't really want to impact it by taking a short profit target, you know, 1%, 2%, 3%. So instead, what we're going to do is make it long only, and I'm going to take a profit at 12% above the open price that we bought in it. So the close price of where the buy and sell signal came. And if we run that now, what you see is you improve it really well. So we've got our drawdown is very slightly worse than what it was for the MACD cross strategy above, but we've massively increased our return, 367%. We're in the market a bit more, and we've got 85 trades, so not really enough to be statistically relevant, but still enough to play with, and a good win rate. So, and you could probably add, stop losses here in to sort of improve this. I really haven't played with this a lot. I was just looking for a reasonable figure here. And a reasonable win rate. That's normally what I look for. So the, and again, we've paid, fees, and we're not using any sort of leverage. So, and I wouldn't use leverage with this strategy at all, but at the same time, it does okay, right? So not bad. So we've got it working with QQQ after paying fees, not using any leverage. So now we're going to try and improve upon this a bit more. So let me create some more cells in our book here, and we're going to do the same thing we did before. So I'm just going to copy and paste a lot of it. So what we're going to look for is a high beta stock. What we're after here is a stock that trends strongly in both directions. So we don't want a stock that goes flat for ages. What we want our stock to do, or the best one for this strategy anyway, is a stock that either goes up massively or goes down massively, right? So we want movement either way. We just don't want a flat period. So what we're going to do is create our third strategy here then, and what we're going to use is Tesla. Thank you, Elon. And again, we're going to take 10 years worth of data on the daily time frame, and this one should pay dividends because it's exactly the right type of stock for this kind of strategy. So when you're holding these periods here, Tesla during this period here probably goes up 50% when the Nasdaq goes up 10, that kind of thing. That's what you're looking for. And then during this period here where the Nasdaq goes flat, Tesla's probably getting killed by 20%. So maybe there's an opportunity to use a short on this strategy. So let's go and do that. So I'm going to take my MACD calculation again and move that down here. And then let's create our chart again, just to make sure everything is working when we actually run it. I'm going to leave a little bit of a gap there like we normally do. And then I want to set my indexes to date. So I'm going to grab all this. We won't have to do all of that. It's just a bit for me at this point, right? So the So if I now, let's run this, and then I can't really run my chart. I've got to comment this out, but now let's run it. Okay. So this is what I mean about Tesla. So, tell you what, let me run that as well. Okay. So now we get our date at the bottom here. So this is what I mean about Tesla. So when the Qs go flat, Tesla's dropping from, 488 all the way down to 337. So it's, it's getting killed, right? And then in the uptrends, it's rallying strongly from 330, up to 470. So it makes big moves, right? So it's a high beta, high volatility kind of stock. And that's exactly the kind of one that we want to be using for our strategy. But then if you notice the histogram, don't forget we're going to be using the histogram to trade here. You can see that it's not as smooth as it was when we used the 3-period rolling average on QQQ to make it better. You can see that you are getting, like here, for example, I'm pretty sure that's going to be a false buy signal because it turns up temporarily before turning back down again. So what we're going to do is smooth it a little bit more. So rather than using the 3-period rolling average, I'm just going to match that with N3, which in our calculation here is the 9-period rolling average. And then if I go back in, actually, I can just pull it all from here, can't I? So if we go back in and grab the signal function, okay, and our function to add the prices that Plotly uses to render the buy and sell signal. So this one here. Okay. Now for this one, because it's high beta, you're probably going to get away with a short. So with the Qs, when you got a sell signal, it didn't really do anything good for you. But with Tesla, because it actually trends in both directions, so it's either losing a lot or winning a lot, you could probably get away with a short here. So if I, let me just uncomment these and then we'll run the whole thing. So we're going to use this exactly the same methodology. So we're going to use the histogram. We've smoothed the histogram a bit more in our MACD calculation than we did before to account for the additional volatility that you get from Tesla. But we're going to use exactly the same method. So we're going to use the histogram to actually trade or generate our buy and sell signals. And then, so let me just run the whole thing and see if I've made any mistakes. So, okay, so that's Tesla. So and you can see you've got your buy and sell signals as normal here. So buy signal right at the low, sort of semi at the low. Even within the downtrends, you're getting them at points where there's potential for a profit. But on the whole, it's so choppy. But let's run a back test anyway. So what we're going to do is, for our long side, just like we did in our original strategy, the crossover strategy, what we're going to do is we're not going to set a profit target on the long side, because with Tesla, some of these runs are epic to the upside. I mean, epic. So there's a chance that you could make an absolute fortune getting a buy signal here and not getting a sell signal for 80-90% higher. But on the short side, I think a lot of these, if we take sort of, or aim for a quick profit and use a stop, obviously, but aim for a quick profit, could actually do you quite well. So let's grab our backtest script here. And same thing, we're not going to use any leverage and we're going to pay commission. Here we go. So what we're going to do on the long side, I'm not going to take a profit. I'm going to let the sell signals take me out of the trade. So a bearish, so if I get long, say here, for example, I'm not getting out until I get a sell signal, that kind of thing. So, but on the short side, I am going to, in fact, we'll comment this out and have a look at it. So if we run it raw, it's probably not going to make any money. And that's because you're not using any stops or anything like that. But if we add some stops in here, so if, say, we set, what did we come up with actually? So I think it was 6%. So if we take if we do a 6% stop, so that would be, so this line here, price, it takes the price at the close of a buy or sell signal bar. And then from that price, we set a stop loss or a profit target. So this is going to be 6% above that, whatever that price was there. And then for our take profit target, we are going to set that at, we want something, a good average, right? So I think something that, so 470, and it's dropping there. I mean, you could get 10%, couldn't you? It either gets a buy signal that takes you out, so it takes the profit there, or some of these periods here, I'm sure you would get, what's the low there? Yeah, so about 10%. So if we set that at 90% of whatever that price was. So if we run that, let's go and have a look. And yeah, that makes money, right? So you're not in the market very much, but you made 233% just on shorting. Your drawdown's not too bad for a short only strategy. You've got 80 trades. You only win half of them, but your best trades are outperforming your worst trades, and therefore you're making a bit of money. And if we add in the long side, because the long side is a monster, you will find that your return increases to 22,533. So effectively, if I now run a profit and loss graph for this one, you will find that a 100 grand investment 10 years ago made you currently 22.5 million. So, and that is the value of a high beta stock with the right strategy. So you're getting in at the lows, and you're holding your trade. So let's have a look at some of these best trades. So your best trade made you 136%. So that's because it's trending in one direction and you're not getting a bearish cross of the MACD signal line for a long time after your buy signal. And then your worst trade lost you 23%. That's probably going to be on the long side, by the way. It's a volatile stock. And obviously your drawdown, it's hard to take, right? So you're going to, this is the kind of strategy you would put only a small amount of your investing capital into, because the drawdowns are absolutely horrific. But a tremendous strategy and good methodology, I think, personally, for getting in at the lows, like we're using the MACD properly, which is all about the histogram, nothing to do with the MACD or signal lines, really. It's all about that histogram. And then depending on the volatility of your stock, you want to be smoothing that really nicely. And that's what's triggering your long positions. So you're getting buy signals right at the very lows, which is what you're looking for, really. And then on the right stock, like Tesla, can make you an absolute fortune. If I had a time machine, I would go back and stick $500,000 on that one. So, all right, that's enough for this week. Thanks very much. If you have any questions, please feel free to email in. Email address is info@bubble-analytics.com. Consider looking at our website, please. We offer backtesting and automation strategies. We can automate your strategy for you. We also offer a high quality signals service where we generate buy and sell signals and send them to you via push notification in real time. And then you can get all the stats here you need either in the public section or in our active trade section, for example, here on the retail stocks here, plus statistics and everything for all of the strategies. All right. Have a good one. Thanks now. Bye-bye.